Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, on this smashing Sunday for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And it is indeed going to be a jam-packed one. We're going to really predominantly be focusing on the macroeconomic environment and reassuring you guys that it is still our view, and why it is still our view, that the markets have a great time ahead of them, certainly in regards to what central banks are about to do and what that means fundamentally for the markets. And there was a rather negative close on Friday. I really think on the back end of a very lackluster non-farm payroll. I'll be looking at Yellen, who is the Treasury Secretary of the United States, comments on this in regards to what she thought of these stats. We actually agree with Yellen in regards to no cause for concern on the back end of them. The markets just didn't like the kind of, I guess, lackluster nature of them. It wasn't definitive either way, either in a bearish or a bullish way. It was very kind of flat and negative. And actually, we know the Fed are going to try and goose the economy at a time where it's not recessionary, it's just slow. And ultimately, that's the kind of recipe for the markets to do well. And of course, this is going to play into global liquidity cycles and everything in between. So we're going to be starting the video off there. We're going to also be relating what's going to happen with the Fed to Warren Buffett. Warren Buffett is sat on a record amount of cash. But what many people don't realize is this is just what Warren Buffett does. And I'll just show you that to start the video off, because people always talk about how much cash Warren Buffett has. This is Warren Buffett's cash in regards to percentages right now in relation to where it's previously been. He has, at previous points, held significantly more cash at different times. And actually, him holding high amounts of cash often hasn't always correlated. You know, he was very cash heavy in 2005 and largely got back into the markets just in time for the 2008 financial crisis. So he's not the best predictor. We're going to be talking about that and how he's holding a lot of his cash in regards to money market funds and how this all filters into global liquidity. We'll be looking at global liquidity against BTC or the BLX, and then we're going to be talking about China. We had news about China in regards to refinancing their economy, and this week ahead is going to be a pretty interesting week for news to come out of China. So we've got a hell of a lot to get into. Let's start things off with the global liquidity cycles, and they're very cyclical. They align with the Bitcoin 4-year cycle. They align with the business cycle, of course. They align with PMI cycles. They align with election cycles. You know, there's kind of many things that are pointing in an upward direction, or the cycles would lead us to believe there's a good time ahead of us. And of course, global liquidity is largely the main one. The main driver for this is going to be the downside to the dollar, the Dixie, that is all going to come on the back end of interest rate reduction, meaning that they're going to lower interest rates, which takes out the demand for the dollar, which is the dollar come down. And we know that historically, there's been a dollar weakness play in every single bull market. And we have the technical targets, we have the fundamental reasoning and everything in between to expect the dollar to continue to the downside. Dollar was at support last week. Of course, this had leaned on risk. And then you had that non-farm payroll, which was just more boring than anything. People were just like, we give up, you know, on the back end of that. If we look at the BLX, we can see we've got the global liquidity index in green. You can see how these move. And we're very much in a 2018 to 2020 period, ready for that explosion or that acceleration in global liquidity, all on the back end of what we've previously just spoke about. And it is coming, guys. They are going to, and I think there was a sigh in regards to, okay, well, the non-farm payroll number wasn't definitive, so it's less likely they're going to do a 50 basis points, more likely they're going to do a 25. I still think they could do a 50. I think that's more than plausible. But ultimately, it is happening, and we know the correlation between the Dixie, the dollar strength, and, of course, interest rates. The week ahead that we have for you guys, we actually have the ECB, the European Central Bank. They're going to continue to lower rates to 4%. So this is the adverse of what we've seen with the Bank of Japan upping rates and how that's affected markets. In the adverse in regards to stimulating markets, certainly the European markets. And when we look at European housing ETFs, they look pretty good, in line with global liquidity, in line with the Bitcoin 4-year cycle. The stars really do align, guys. And it's just a case of sticking on that scent, if you will. And there's going to be something fundamental happening, which is going to relate to Warren Buffett in regards to them lowering interest rates. And that is that there is currently $6.3 trillion. We can show you in regards to the official stats. $6.4 trillion locked in money market funds. So these are typically shorter dated treasuries, which is where Warren Buffett has a lot of his money. In fact, Warren Buffett from Berkshire Hathaway holds more US Treasury bills than the Federal Reserve. Berkshire has $234 billion worth of investment in T-bills, more than the Treasury, ladies and gentlemen. Now, I don't know if a lot of this counts as cash, but if it does, what you're going to see when they lower interest rates, which we know is coming, is people move out, not all, because there's a lot of corporate money in there, of these money market funds back into markets because they're going to hunt for yield. And this all factors into global liquidity. Right now, a lot of money is locked up getting that 5% risk-free trade in treasuries, just like Warren Buffett is. However, when they start to lower this, you are likely going to see people going back into the markets in the hunt for yield. And I think Warren Buffett is no different. And we constantly see people saying, oh, well, Buffett holds this much cash. This is a really bad sign. You know, he knows something's coming. Well, there are periods, like we're showing you here in the past, where he's actually held more cash in relation to equities. Berkshire Hathaway is required to hold onto cash. Just because Berkshire Hathaway holds it's well over now, $200 billion in cash, doesn't mean they can invest all of that cash if they find a big enough target. I think of the cash, roughly half of it is legitimately deployable. That is absolutely true. There was something putting into perspective, and I'll just find it. Putting Berkshire's cash pile into perspective, instead of measuring Berkshire's cash position on an absolute basis, meaning the amount of cash, that would be at all-time highs. You know, money has increased significantly in the supply of it. It makes sense. That's why we see ever-increasing volatility in the markets. Investors are better off measuring the cash pile as a percentage of Berkshire's total assets, according to Bloomstrom. And a 17.5% Berkshire Hathaway current cash position is about in line with the long-term average. It's gone up a little bit since then, by the way, guys, but not massively. When measured against the firm's total assets, Berkshire Hathaway has kept cash on its balance sheet at an average of 13% of assets since 1997, according to Bloomstat. Another way to look at Berkshire Hathaway's cash position is measuring it against the firm's market valuation, which paints a similar picture. Berkshire Hathaway's 189 billion cash is actually a pretty normalized level, as well below its peak of nearly 40% in 2024. And you can see this. They've had higher cash positions, and actually their highest cash position, they actually deployed the markets back into the markets right for 2008. So when the shoe kind of drops, which we think, you know, the likes of Yellen very much highlighting this, and people realize that we aren't going into an absolute nightmare. The Fed is going to goose the economy, so to speak. There's a record cash held by a record number of companies. They're going to have to get back into the markets in a big way. And that's ultimately going to drive liquidity. We've spoken about the Dixie play on that and everything in between. It's a great, great picture that ultimately is setting up. And not all of this money, because quite a bit of it is corporate. A lot of it in regards to retail getting that 5% cash. You know, when these interest rates start to come down, certainly in a rapid rate, people are going to go to move elsewhere. Right now, it makes sense to be sat in cash, and we can see that, you know, Berkshire certainly is in regards to US Treasury bills. They're going to have to allocate elsewhere. Let's talk a little bit now about China. So in regards to global liquidity, China is a factor. And a couple of weeks ago, we had news that China is considering allowing refinancing on $5.4 trillion in mortgaging. This will goose their economy. This week, certainly starting on Monday, we have a hell of a lot of economic data. This is from Chris Weston. China on the radar. What can turn this ship around? All eyes have rightly been on the US data, flow, and obtaining clarity on the Fed's 25 versus 50 basis point debate, which, of course, Friday's non-farm payroll didn't give us much clarity in. But for those who have not watched, China should also be firmly front of mind. These charts should be on the radar. Firstly, the monthly growth data dump comes out this week. The outcome of the data could matter more than usual. China's equities, so he's pointing out Chinese equity, and I actually think Chinese equities don't look too bad. A lot further behind than many out there, but generally also again in line with global liquidity, where it's kind of at and where it's going. Is it a strong downturn? And rallies have been used as exit liquidity. One suspects state-owned banks will be lent on soon to try and turn this ship around. Soon may start talking up Public Bank of China, or the whatever it is, liquidity put, in much the same way that you're going to probably get that liquidity put from the Fed, making it either cheaper to refinance and ever lower costs of capital, has seen banks, NIM, more below 1.6. This is not healthy for the banking system, who needs the NIM above 1.8. It talks about Chinese government bonds or yields, bonds. It talks about Brent. It talks about a number of other things. So we are going to see a put, I think, not just from the US, but also from China. And ultimately, this is all going to factor into global liquidity and kind of reassures us that the situation that we have in front of us is a good one. So there's a lot of reasons, despite the pessimism in the markets right now, to be very bullish and expect a good time ahead of them. There's, of course, uncertainty, like what we saw on Friday that's playing into them. But ultimately, it's just a case on being on the right side of what is a broader trend. And we believe a broader trend that is likely going to see markets do rather well. And we've just looked at a couple of reasons in this video. So we very much think a Chinese put is coming. We know that the Fed is about to lower interest rates. We know what that's going to do for the Dixie and in turn risk. And of course, when you look technically, certainly at Bitcoin, which we'll do very quickly now, guys, because we've spoken about it quite a bit, the stars are aligned. It's going to be interesting to see. We had a really bad Friday. It's going to be interesting to see how the markets open up tomorrow. And of course, we'll be updating you, as always. We'll probably do you another live stream tomorrow in regards to the markets. We got a lot to look forward to in regards to funding flows and all this sort of stuff. When we look at Bitcoin, the stage is absolutely set, ladies and gentlemen. In just the same way that it was set for gold, in much the same way it was set for Vanex semiconductors, you can see ran into highs, did the exact same thing, so on and so forth. So hang in there, guys. We'll update you on the markets tomorrow, as usual. If you're not already a subscriber, do consider becoming one. And of course, check out the links in the description. Do consider becoming a patron. And on that note, I am going to love and leave you. Thanks a lot for watching, guys. I'll see you all in the next one.